So in this recording, I'd like to go over the content in the MBA 630 for the finance course. The purpose of this recording is to share the overall layout of the course and more specifically the assignments and the some examples of some submissions from the students. So uh, what I have done basically is taken the finance learning requirements, and between the 8 weeks, I have broken it down into two large modules. From week 1 through 4, the focus is to think more from a business plan perspective, and that is how would one think about putting together a business plan, the financial analysis associated with it. And in the second half of the semester, more focus on understanding and forecasting financial statements of large companies. So what I will do is quickly walk you through what is in each module, make some comments on why I put them in the sequence I have. I wanted to have some scaffolding process going through from week to week. So starting with pre-week 1, what I do is I give them a recording, and so before the class starts, this recording over here is one of the recordings that I have done that I will also use it later in the class. And the purpose at this point is to make sure that before the class starts, students have been able to access to integrity recorded lectures. I use quite a bit in most of my modules. Obviously, it's helpful for both on-ground and online. So here it is on financial statements. It's a very basic module on financial ratios, etc. And here I'd like them to do is to go listen to the recording and then write just a short essay. And over the whole idea is that I want to make sure that everybody knows how to access the recording, and if there are any computer glitches, they are resolved before the class starts. So that's what they do in pre-week 1, and also have them start thinking about it. The module that I've created for pre-week 1 ties in as an overlap from the MBA 633, which is the managerial accounting course, what we call accounting for decision makers. So by design, I created a little bit of overlap between these two courses. And so the very first module talks about the ratio, which is also covered in the MBA 633. From week, the large assignment I give them, I'll share with you what that is in a second. But if I go to week 1, what I do along the way is to give them individual assignment. As you can see, the first one, which is really, again, an overlap, tying it back to the MBA 633. They've taken this class, a semester ago, so some of them may have forgotten about it. So very, very basic construction, income statement, balance sheet, individual assignments, only 20 out of the 1,000 points, but I just want them to get them some familiarized again, and also get used to the Excel again, because every assignment has an Excel. I give them another one for glassware company, which is, and again, in both cases, they have to use Excel. So this way they get comfortable with the Excel again. And I want to share with you examples of these assignments from student submissions. So you'll see what it looks like. So these are 20 points. It's not a lot, but they get to start to think about it. Now, at this point, I also give them the assignment, which is what I call Max Inc. 1, 2, and A, B, and C, and D. And those are broken up into pieces. So what I want to do is to show you what the assignment looks like. This is a case study that I created, and what that is a company that I call it Max Inc. And the whole idea here is that I want them to create an integrated financial plan for the business. Here, the learning outcome is forecasting, doing the pro forma, tying in creating the income statement, creating the cash flow statement, doing the net present value, doing the internal rate of return, etc. So information they have to develop is a sales forecast. They have to develop the labor, material, and the variable forecast. From there, obviously, the gross margin. And then based on the assumptions I've given them that I'm going to share with you in a second, the operating costs, forecast, salary, wages, facility, office related costs, estimating how much capital they will they need to start the business. I give them some assumptions, debt versus equity, so then we'll help them decide what the interest expense will be and so on. They have to forecast the depreciation, also working capital forecast, especially as we all know, for a small business, startup business, people don't pay attention to the accounts receivable and the inventory working capital required. Break-even analysis, pro forma income statement, pro forma cash flow statement, cost of capital. Here is where I start to get them exposed to the working, weighted average cost of capital, net present value IRR. Then I have them do some what ifs. I'll share with you what do I mean by that. And I give them, typically depending upon the sessions, I will give them some of these things. For this particular session, I had them do how would you value this company, and if you had to invest in productivity, how would you do this thing? In the past, in the class, I discussed make versus buy and acquisition, and sometimes also give them an assignment for. But for this particular session that we just finished, a semester or so ago, I had them do the company valuation, investing in productivity. So I break it down in chunks, and I also give them the format. So this way, obviously, as an Excel file, it gets pretty complicated. In order for me to give them feedback, is what they did right or wrong, I give them the format they have to follow. So I break it down into part A, B, and then C and D. So overall, first, obviously, the assignment is the business plan is a Maxwell. Give them what the case study is all about. It's a small company starting a business making dinette sets. They're going to only have one model. I give them some assumptions for the market size. I give them some assumptions for what percent of market share they will achieve by a certain year. What are some of the assumptions? And again, over here, because this is not a research class, this is not a marketing class, I talk about how one would do it. They already should have learned from the research class in MBA 607 and also from marketing. Here I said, once you have taken the information, how would you put it in the blender for finance? So I give them some assumptions as what the growth rate will be. I also tell them one of the most important part, or one of the important parts for this analysis, to be able to do what ifs. So your Excel file needs to be integrated so you can do what ifs. I told them up front they expect to, suppose if they have to do, there's a price war, how would you change the price and so on. I give them some assumptions for price of the table, inflation assumptions. What is the value chain, which means that they're going to buy lumber. Again, this ties into the MBA 633, managerial costs. So I give them some assumptions there. The cost of lumber for the table, tabletop, legs, supplies and so on. Then some labor content. It'll take about 3 hours to make the tabletops, 3 hours to make the legs and so on, and etc. So now they have all the information they need. The part A and part B is basically for them to do a pro forma for a information going forward. So first piece is a sales forecast. So here I give them the format, otherwise would be obviously difficult to follow their assignments, because once I show you the example of the Excel file, you will see why. But anyway, here they have to do a forecast. Based on the assumptions, what the sales forecast will be. Same thing with the cost of goods sold forecast. What would that be based on the assumptions of material content for the lumber, supply, so on, labor, number of hours, hourly rate, and so on. From there, they get to the gross margin. Then they have to take the other information and calculate the operating expenses. So they have to create the cost for, the factory-related costs. There are people in the business, the accounting supervisor, salespeople, so on. What the forecast of salary and wages will be. Based on that, then they have to calculate the startup cost. And from there, they would also have to forecast the depreciation. I have them use a 5-year modified Excel depreciation. Because this is not an accounting class, I do give them the depreciation schedule, as you can see, first year 20%, 32%, and so on. Then they have to calculate the working capital. I give them some assumptions, basically, and then they should be able to change it in the model. I say start with a 3 months worth of inventory in year 1, which typically what will happen in a new business, you carry a lot more inventory. And after that, make it that you need only 1 month worth of inventory starting in year two. Accounts receivable, I tell them to have at least 1 month's worth of sales, a 30-day term. For accounts payable, I explain them what it is, but for a startup business, they probably will not be able to get credit from their suppliers, so the account payable will be zero. So from there, they have to calculate the working capital, and here my goal is for them to be able to forecast cash flow. So the cash flow obviously is coming from a couple of places, the net income, plus depreciation, but also change in working capital. So here they have to be able to calculate based on the terms, like over here, accounts receivable is 1 month's worth of sales, and then for the inventory starting with 3 months, but they should be able to change these variables. If these are not connected, which means if I go in the Excel file and if I change this 3 to a 2 and everything does not automatically change, I take the points off. Because that is really, really important for a financial analysis to be able to do that. So goal here is to figure out the change in working capital, which they will need to come up with the total cash flow, which they will need to do net present value and so on. Okay. I have provided them, in order to help this with this process, I have provided them with the, just 1 second. I have provided them with a recording to explain how to do this stuff. So they have something to go to. And again, I did it obviously for the online students, but for even the on-ground students, they found it helpful to go back and look at it. So here they again continuing with developing the business plan, the forecasting, the startup, so on. So they have the question mark is the information where they have to calculate. The Excel file has to calculate this information. I have them put some buffer in, because the learning, obviously, as we know from starting a business, is that you can never be exactly what you forecast. It is typically you want a buffer for at least 20-30%. So I told them to buffer 25%. So from there they lead into forecasting. Then I tell them, for right now, assume that your debt will be 50% of the startup and the equity will be 50%. At this point, for this part of the analysis, at this stage, I give them the cost of debt. As I said, assume is 7.25%. So from there, they go in and they calculate the interest expense, and eventually they get to this point where they calculate the income statement. So now the whole file eventually gets to the point where they're doing a pro forma income statement from sales, cost of goods sold, etc., all the way down to net income. Okay. Now, then once they have been able to do that, now what I do is, at this point, before they would do the next part, after every part, I give them the answers. Now, I don't give them my Excel file. I just give them the screenshot of the answers. So this way, and I give them feedback of what they have done, quote unquote, where they were wrong. But then their goal is to go in and update the file before they do the next phase, because if they don't update it, then obviously from this point on, everything will be wrong. So the process is that at every stage, part A, I give them the answers. After part B, I give them the answers. Part C, I give them the answers. This way they can go in and then fix their file as they're going through it with my feedback that I give them in quite a bit of detail, but also the screenshots of the numbers, so they know how to do that. Now, once they have done the income statement, the next thing obviously is to go in and have them learn the cash flow. So they have to go do the cash flow. Here, their goal is to now add, which is shown in the yellow little bit on the bottom, income statement, is I have them think like, for example, what is the market share required for them to do break even? So here they're learning the pro forma, both in terms of calculating the break even, some key metrics, the gross margin percent, the operating profit percent, the profit margin percent, the cash coverage. So here they can start to see some of the key metrics, and then when I talk about the ratios in more detail in the later part of the semester, they can start to make the connection over here. So now, once they have got to the point where they have done the income statement pro forma, they have done the cash flow, now I want them to do is to calculate the NPV and IRR. At this point, first I give them the discount rate R. I have not gotten into calculating the WACC and the discount rate, which I do later on, but at this point I want them to learn how to do the NPV. So I give them the R and I tell them to use 15%, and then I also have them do the IRR. So here they basically have to calculate bring the cash flow in from their Excel file. So the net income, adding back depreciation, any investments in the business, change in working capital, net cash flow, and then they calculate the NPV and IRR. Now, part of this exercise, which is part C, is I also have them understand how sensitive some of these things could be. And by this time, I have given them feedback in the Excel file as far as is the Excel file integrated or not, because they want to be able to make some changes. So then I ask them to do is to say, identify some what-if scenarios. You identify what they are, but then you simulate it in your business model. Okay, and so you can decide based on that you think the economic downturn for the future forecast sales could be worse, and maybe instead of 3% growth could be only 2% or 1% or negative growth. So here they would go to IBIS, they would look at the furniture industry and realize that maybe the growth rate of 3% is not plausible, and they can go in and change the assumptions in the model. And here they have to do is so I have them do three scenarios. They describe what they are, why they pick those scenarios, and for each one of them, baseline, scenario 1, 2, and 3, calculate the NPV and IRR and provide some conclusions. Part D, which gets into the week 4, is now that they understand the connection between the assumptions and the net income and the cash flow, then I have them do is they say, okay, let's learn about valuation. Okay, so here now they have to do is I give them D1 and D2. D1, I said, okay, what if you had to buy this company? How would you value it? So again, and again, I have modules recordings on how do you do valuation of a company. And so they have to do is to figure out the valuation of the company. And here I also ask them to come up with the working average cost of capital, which means I tell them you calculate your own now. I gave it to you, but now you got to calculate your own, because as I'm going through it, I have already done some lecturing in between about WACC and the N. The next thing I have them do is to say, okay, same analysis, let's learn how to use it for investment strategy. So I said, okay, what if you did some automation, and that will make the table faster, make some assumptions, and in order to have some consistency, I said, you can invest $200,000. You do some research and come up with some information, but more important is then simulate those assumptions in your financial analysis, and then tell me what does it mean, and so they have to do that. Okay, so this basically is a pretty involved case study that I've created, and then they have to go through it. Now let me show you some submission from a student, so at least you will get a feel for what does that mean. So I'm going to go to my Canvas class now. So again, just quickly go through it before I get into this maxing part A, B, and C. Again, like I said, they do individual assignments, very, very basic stuff, so I'm not going to show you that. This is where they are kind of doing some basic Excel exercise individually, only 20 points, 20 points. So let me go to, here I give them the recording. I give them the recording of what I am explaining this way. Obviously for the students that are online, a pretty lengthy recording on what is maxing exercise all about using a PowerPoint. And so they have 2 recordings they can access. I also give them another one that is similar, maxing, what I call sharing, and I kind of use that to explain how one would go through it, so they understand the methodology, so they can apply it to the maxing. So as I'm going through and giving them the team assignment, I'll also give them individual. So let's look at the first team assignments, which is Max A and Part A and Part B, which is your about 80 out of 1,000 points for the semester. So here, if I go in, let me just take one example to show you, and I'm going to use the same student, Justin. I think he's a pretty solid student. And if I take so let's take his, again, this is a team assignment, obviously, so it's more than one person doing it. So here, if I look at this thing, I'll show you his Excel file. So now, what students do is obviously I have them follow the tabs. So this way, obviously I can see what they have done. So they have to use the information, and obviously they have to forecast. What I do is I click to make sure not only the answers are correct, but that the Excel file is being used as expected. So these are the assumptions and these are the calculations. So here they get the sales forecast. Next one will do the cost of goods sold forecast. Again, they have to tie to these assumptions. So if I go in and I want to make sure that everything is connected, because that's part of the exercise. So I want to make sure that numbers are coming from the right place, and so they are connecting all the information they would need. The labor hours, the material costs on the top. Value chain is they're going to make the table, they're going to buy the chair. So this over here, for example, is they're going to pay $150 for 4 chairs and so on. So from there they get the gross margin, from also get into the factory expenses based on the assumptions of how much big the factory is, the rent, etc., etc. They have some people in there besides the labor. They got, and so they'll be able to forecast that. From there, depreciation, working capital. Again, I want to make sure that if I look at the inventory, it is tied to the assumptions for the turns, which is about 3 months worth of inventory in year one. So I go in and check to make sure it is happening. Here it is happening. So this way, the connectivity is important. So they have done a pro forma for the working capital. They've done a pro forma for the startup and so on. And so eventually, if I go down to the income statement, so here is the income statement for the assumptions, case study assumptions that were provided. Now, goal here for the students is obviously be able to do a pro forma for sales, cost of goods sold, all the way down to net income. But also want to make sure, because the model is integrated from tab to tab, I would go in and make sure that everything is coming from the place. Then I would test that Excel file by going in and changing the input assumptions. And if they don't work, I take points off, but then I give them feedback. Then I also give them the screenshots of all the answers for all the tabs so they can go fix it. Okay. Now, the next thing is that so now they have done the pro forma up to the net income statement. Okay, so now the next thing is obviously getting them into the cash flow conversation and the IRR and NPV and so on. So let me show you what that would look like. So if I go to the part C and D here. I'll just use the same student for consistency. And so here, part C, basically, I told them to come up with the scenarios. So let me just download the Word document summary, and obviously they're supported with the Excel analysis. So here is the team assigned submission. Here, first you have to explain what scenarios they used and why. Then for each one of them, you calculate what happens to the NPV IRR, and then obviously explain the scenario and what are the implications of scenario 1, scenario 2, scenario 3. And so this is the Word document explanation of the Excel file that they also have to submit. So the Excel file, for example, would include the scenarios, and just as examples for this one, they would go in and provide the cash flow and the net present value for each of the scenarios. And so now they have learned to do forecasting, they've learned to do some what ifs and so on. And then finally, I have them do one more exercise with this Max Inc., and that has to do with valuation. So if it's obviously by this time they have also learned about valuation through the lecturing and recorded lecture on valuation. They've learned about WACC and so on. So let me show you what that looks like for part D. D1 is valuing the company. So they have to value this company, what they forecast to the cash flow and so on. and with the help of this a textbook that they have along with my recorded lectures, they would know how to do valuation. So here is the submission from the student. So here the job is to um, explain everything, but also be able to calculate the WACC. So this person has calculated the WACC of 18%. The other thing I want them to also understand that WACC is not same as a discount rate, especially when you look at the large companies, because WACC is really weighted average cost of capital, but that means everything is average, which means if you're looking at the performance of the company, it is an average performance of the company, so it does not recognize the nuances of a new project. So have them kind of think through, and again, this is where obviously there is no science, it's more of a little bit of experience and art, but I want them to first explain me and do the calculation on WACC using the methodology that I teach them. And again, because this is a small company, they start to recognize that the risk is much higher and so on. And then they, aside from the WACC, they have to provide some thought process of how, when, why would they add risk factors to go from WACC to discount rate, which in this case came out with 23.5%. And so here they explain it. And obviously all that is then in their Excel file. So in the Excel file, they would so I'll open the Excel file. So here's an Excel file. I'll open the, let's see. So let me go to here they do the WACC calculation. So they basically gone through the analysis of the WACC. Where you have to look at the risk-free. I have them use a 10% U.S. bond, which is about 2% right now. Market risk return based on the research, they realize that for a small startup company, the market return should be more like 25%. They use a beta of about a 1.24, and that is typical beta that they find through IBIS and through analysis of what the beta is for furniture type businesses, cost of capital, cost of equity, and then they do the cost of debt, and then based on the 50-50 ratio between equity and debt, they calculate the discount rate, which in this case comes out to 23.5%. I also have them come up with at least one or two of the methodologies in the textbook that I've given them, the valuation using the multiples like the price to earnings, or a valuation based on EBITDA and so on. So here they will use the discounted cash flow, which is for the 10-year period, then the terminal value of beyond 10-year period, then obviously coming up with the total sell price, using the multiple and so on. So they basically go through and do that. And here they provide some information on how they came up with the industry data. So here they looked at some furniture companies, looked at the beta, multiples and so on, and that gives them at least some idea of what the averages are, and that's what they use to come up with the multiples there. Now, so that basically, so now for basically is how they learn the valuation of a business. Now, the they also have them, in order to also have them do some what ifs, I also have them do another exercise taking the same model, but I say, okay, what if you are going to invest in your business and create some productivity, and that is what I call the max part D2. And here they are taking the same analysis, and they are going to make some assumptions. And assumption is that if they can invest $200,000 in labor productivity, what would they do with it? So here, in this case, this particular team basically made some assumptions. Is what they're going to do for investing it. They made some, and once they made the assumptions, what I'm looking for is not just the assumption, but how will they embed those assumptions in the model they created and do what if. So here they have to explain what it means in a 1 to 2 page document, and then the Excel file explains how did they embed it into the. So here obviously they have made some assumptions. They can see they're assuming supplies will go up, but there will be some cost of pallet. They made some assumptions there, changes in the factory cost, et cetera, all the way through all the tabs of the financial analysis. Eventually, when they get to the income statement, what does that mean? Cash flow, and obviously NPV and IRR. And so this is where they say that if you're going to make these investments, here are some of the costs are going to go up, some of the costs are going to come down, and the net impact is that the NPV will get better or worse, and that's how they're going to decide if this investment was worth it or not. So here so far what I've talked about is the building your financial model from bottoms up, doing the pro forma for sales of cost of goods sold, all the way to net income, then getting into the working capital, then getting to the cash flow, then doing some what ifs, including doing the doing the WACC and also doing the NPV and IRR. So now, in order to provide, as they're going through it, in order to provide knowledge for their topics, as they're doing it, what I have provided them, for example, in week 2, in week 3, I have them do some individual assignments on NPV and IRR. So this is where I am teaching them. Basically, it's only 30 points, but they have to do NPV and IRR for cash flow and learn how to use Excel to do that. But then in there, I give them the recording on NPV, I give them recording on IRR, I give them recording on even payback. I walk them through with a recording and how would one use that in Excel, and so that and again PowerPoints to go with it. So that allows them to learn NPV and IRR. And as I mentioned before, along the way I would give them the solutions as we go from Part A to Part B to Part C to Part D, then Part D, Part E, and here I also give them the recording for WACC. And then how do you go from WACC to discount rate? Obviously, those are really two different things, and they have to understand the differences and how do you make the connection. I have a recording that I have done for them, so they have that. This is a recording that I did for them that I put it on YouTube. Most of my recordings on integrity. This one I did put it on YouTube for easy access. Then they also have to do an in-class presentation in some cases, and if they are on-ground students, and so now, along the way, to test them individually, I gave them some simple assignments. Here is, for example, one on. I would give them an assignment individually so they can kind of do a very, very basic forecast. So here, for example, if I would look at an example what that looks like. So this is obviously not as comprehensive as Max Inc., but this is again for them to kind of make sure that they individually know how to do it. And so here I give them some assumptions, and they have to give them a few questions. For each one of them, they have to create this pro forma income statement for 3 different assumptions, and each one has a question, and in the front they summarize what are the implications for base case versus 20% more volume, et cetera, et cetera. So this individual assignment, testing them for Excel, testing them for NPV, IRR, and so on. Now, from this point on, I now switch over to using more the large companies, okay, existing companies and so on. So here I have one case study that I use, and so starting going week 5, I give them recordings, and I give them some information on how do you evaluate performance of a company. I have some recorded PowerPoints that I've given them before. By the time they get over here, we use the one case study in there. And so here, the assignment includes. So let me show you what that team assignment looks like. And again, it's tied to that case study. And here I give them obviously a lot of feedback depending upon who the student is. Some students need a lot more feedback. Some students do not need as much feedback. So I'll stick with Justin, who obviously did a good job, but even though they needed some feedback. So here, they have to, there are 3 or 4 sections to the assignment. One of the ones I have them do first is to explain the process of how would one do how would you go in, and explain how would you do overall process of analyzing your financial health. And again, this ties to the case study, which does talk about it. And so here they talk about how they would do that. So that's the purpose of this part of the exercise. Then they have some Excel analysis. The case study tip, which is the Citronics case study there, has provided some information. So here they have to explain how are they analyzing health of this particular company. So they have to explain how they're doing it, and in Word, and obviously the analysis is in the Excel file that they have to develop to show the ratios. So here they're gonna, so they, it has the income statement, has the balance sheet, and obviously from there they have to calculate the ratios, and I want to make sure that obviously all connected together. So they're effectively using Excel to do that. So now they're learning how basics of the financial ratios, and this part is an overlap from MBA 633 a little bit. So from here, I have them go, and I do a recording on how to use Mergent. Mergent, as we know, is a good financial site that has got all the financial data. So the first thing I do is a recording. So this way, I require that the data be taken out of Mergent, okay? Because I really want them to understand Mergent database. So as part of the recording, I give them I've given them how to use Mergent, okay? And so here in week 6, I give them an assignment. So now they know ratios again. We have applied it on a case study, etc., etc. So here my assignment is that, again, ties to the prior assignment. They are going to use the data. I tell them to analyze Walmart and Target using the data from Mergent. I have them focus on because these are obviously established company, you don't need to worry about their short-term ratios like liquidity. So I have them to focus on the asset management and the profit ratio, including ROIC. I have them analyze over the 5 years, compare them between the two companies. I have them write an executive summary and conclusion, approximately 300 words. Industry analysis, obviously for the industry that these two companies are in, which is the retail departmental stores, about 300 words. Then individual company analysis, each one separately, Target separately, Walmart separately, and then a comparative analysis, comparing one with the other, APA, so on. So that's the assignment they have to do. So let me show you what that would look like. So this is, again, depending on the students, some get a lot more feedback, some get less feedback. Justin and his team obviously did a good job. They do get some feedback, obviously, but not as much as some of the other people. So here is their Word document analysis, where they analyze a company. In here, they're talking about the industry. They're using IBIS as a source for information. And so explaining the overall company A, company B, individually, comparatively, so on. And in here, obviously, they back it up with some of the data for both companies over the last X years. And if there are some nuances, they have to explain it. So that obviously is there. And the data is downloaded from Mergent into Excel. So they provide the Excel spreadsheet. And so the Excel spreadsheet will have the data, so they download the data, and then they obviously also look at the, so they download all the data from Excel, and then they go in from different tabs. As you can see over here, they can manipulate the data and then look at the ratios and use that information. Okay. Now that they have learned how to download the data, they have learned how to use margins, they have learned how to analyze the data, they have kind of understood the apply the ROIC, etc., etc. The last assignment I'd give them as a team assignment has to do with now do some pro forma. Okay. Same two companies, Walmart and Target, and here the assignment is that they have to use again this. I give them a recording explaining how to use Mergent. Again, I'm not gonna do that right now. Sorry about that. How to use Mergent, so they know how to use Mergent, how to download, I showed them, how to put in Excel, I showed them how to move things around. I also explained in the assignment, because obviously for the online students, I explained in the assignment, but through recording and so on. So now, let's see what the submission will look like. So here, submission will be another Excel file, and sorry for the interruption there. I think I had two recordings open there. Anyway, so here is the feedback on what would the assignment look like, how to do the pro forma using the data. So here, for example, as a PowerPoint, just to give you an example, I would have them kind of talk about it in the class, and the PowerPoint will be, for the on-ground students, the PowerPoint will look like, basically I give them 10 minutes each. So they have to do is to show how they came up with the WAC analysis, how did they came up with the ROIC of the two companies, and how did they compare, and obviously the pro forma over the period between, and way I have them do that is, which is they have learned through my recording, is that they are going to use the common sizing, which means they are going to take historical data and common size it and look at cost as a percent of sales. And then they will then be required to forecast the sales based on the average growth rate over the last 5 years. So they do the, they do the CAGR, or the compound average cost growth rate of the 5 years. They use that to forecast the sales, and then they use these percent of cost to be able to forecast. So let me show you their Excel file. So the Excel file, so here they've done the WAC calculation for each company, uh, and ROIC, and then they download the data, and then they do the forecasting. So the left side is the data from historical for the last 5 years, and the right side is 2016 to 2018, forecasting it for the next 4 years. And in order to do that, they calculate the compound growth rate. As it's over here, for example. Compound growth rate for the sales, and then from there they use the common sizing to figure out the forecast. They do the same thing for the two companies and so on. So now they know how to do the forecast by looking at the historical data and using the common sizing and so on. The final thing I do as an assignment is, in the end, I individually want to check to see if they have learned the basic foundational stuff. Okay, so I give them individual assignment for the last week, and there they are basically doing some financial analysis on individually, and I'll show you what that is. So the week 8, this is final 8-week assignment. This is the foundational analysis to kind of capture to make sure everybody has understood what it is, and I give them the feedback so they would know what the gaps are. And so 7 or 8 assignments. I give them a lottery example, time value of money. Person has a choice of lump sum versus that using Excel formulas. And again, I give them the format to make sure they follow, so they do it on Excel. And then, calculating the lump sum future value with monthly versus annuity, so they do that. I give them another time value of money for mortgage based on, if it is a 30-year versus 15-year, etc. A basic double checking, they don't know how to do NPV and IRR. A simple investment analysis where I give them, some basic analysis of a business forecast assumptions, and they have to create a pro forma net cash flow and then do the IRR and so on. Valuation of a business. Here is a business. How would you value what the value of this business is using the discounted cash flow methodology, which means looking at the NPV for the cash flow for the life of the business that we're forecasting, and then the terminal value going forward, and then discounting and adding it up, so they come up with the value over the 5-year period, then the terminal value from 2019 and on, and the present value, the terminal value, and then the sum total of that. Valuation using EBITDA and price to earnings, and again using DCF methodology, so they get tested again over there. Break-even analysis, I give them some assumptions for a lemonade stand, and what would the break-even be if somebody wants to make a profit of X dollar and so on, so test them for the break-even. I give them a data to calculate the WACC and the ROIC and so on. So here I'm basically testing them to make sure they have kind of mastered some of the analytical skills and the mathematical skills to do that. So that basically, in a nutshell, is the financial class for the MBA students. And again, as I mentioned, my goal here is to tie back to what is they need to know for the MBA 640, 680, and 690, and then also scaffolding it back from what they have learned in MBA 633. So in summary, a bunch of individual assignments to test them, along with a Max Inc. Part A, B, C, and D. After each A, B, and C, and D, I give them answers so they can continue to build their model. In between, I give them recordings. I give them, individual assignments, so they learn the methodologies for IRR and PV, etc., etc.